Okay, so good afternoon to all of you. I think post lunch always be a difficult to conduct a session. I think we are at that juncture. I think Madam has put up some perspective of it to make us all alive. And I think the topic which we will be discussing is also a current topic which is going across the globe, and I think very relevant to current situation, what is happening across the globe. I think I have with me eminent panelists with me who will be talking about more on the three part on the this navigating trade uncertainties. Which when we talk about the trade uncertainties, I think the geopolitical fragmentation, what is happening today, is one of the key factor which is playing a role. We all have seen it. The Russia-Ukraine war is going on, and a lot of tariffs being imposed from US to India and Mexico to India and whatnot across the globe. I think that is making a big challenge to all of us, particularly in the supply chain, to manage our sources. Whether we post-COVID, we used to talk about near-shoring, offshoring, and whatnot, going vocal for local, all the aspects. I think that were the rule of mantra. I think everybody has to go with that. The first part of this discussion, we'll be doing it on the base of the reality on this global trade uncertainties. I'll come to Samrat first. Samrat, on your views, how the company are adjusting the sourcing strategy to mitigate this tariff risks, what is happening?
So good afternoon, everyone. I think more than conducting the session, I think post-lunch it is difficult to listen to the session. So I think we should empathize with the audience right now. Okay, on that count, I will talk about my perspective in two ways. Dabur happens to be a company which has got its own brands also, which we are selling. Plus, we are also doing manufacturing for some of our customers who are based out of the Europe or Americas. So I will talk about both the perspectives. How the organizations as buyers, how they are adjusting to these tariffs and uncertainties, and how as a seller also, since we are service provider as well, so how we are looking at that. So both the things I would try to address. But to begin with, I think I will start with an Urdu couplet which says, which tells what's the kind of situation. So they say, "Har shaakh pe ullu baitha hai, anjane gulista kya hoga." So there are so many issues around at this point of time, supply chain, whether you are a supplier or a buyer, both ways. So I think the strategy which companies, when they are sourcing products, the strategies which they are applying, first of all, it is, of course, as we say, China plus one. Typically they are going for multiple suppliers. Multiple suppliers could be within the same geography, or the supplier, typically they would want to have the supply base in an alternate geography altogether. So we have example of Apple, for example. They were sourcing iPhones from China, but when they saw there was a risk of tariff coming up and the issues between India and China, so they shifted their base, increased their sourcing from within India. So we saw Foxconn, which was already there. They started sourcing from Tata's as well, and they increased the sourcing. And now I think they are also looking at Vietnam for sourcing iPhones, for India. So this is one of the most basic things which the companies have been doing. I think other than this, there are many other things also which they are doing. If I talk about the next big thing which comes to my mind is, redesigning the product itself. So for example, if there is a particular component which is attracting a certain amount of duty, so they would want to redesign their bill of material itself to work out the product in such a way that, a lower duty is attracted by the product which they are sourcing from the country. That is the second strategy. And there are, a lot of products in electronics itself, which have already started doing it. I think the third thing which the companies are doing essentially is basically the critical components where they see there is a risk of tariffs going up. In the interim period, they would stock up a little bit. So, the strategic inventory is typically increased so that for that period when there is uncertainty, their sourcing doesn't get impacted because of, all these changes. The companies, we have examples of Indian companies in automobile sector who are actually working very, very closely with the legal experts to rightly define the HSN codes in which they are importing the products. So they are working with legal experts so that they work out the product in the right HSN code where they can essentially manage the duties in a right way, but actually lower the duties. That's also one strategy which the companies are adopting. And gone are the days when they were actually looking at total the unit cost of manufacturing at source A versus source B. Now they are looking at the total delivered cost. So they will look at the manufacturing cost, they will look at the transit times, they will look at the overall inventory holding cost also, plus the duties, etc. So whatever is the end-to-end total delivered cost, they will be looking at that and then deciding their strategy of sourcing. And I think companies like Toyota, for example, they are entering into very strategic partnerships with their with their vendors, where in certain cases they have to also part with some cost elements, but they want to maintain a long-term relationship with them. So part of the cost will be borne by the supplier, but since they have a strategic partnership, part of the cost is also borne by the organization. So I think these are some of the different steps which the companies are taking so that they are able to ensure continuity, or they can ensure within this period of uncertainty, they can manage their own supply chain.
Correct. Thank you. I think just to continue with the topic, Sumit, I'll come to you. On this trade reality, I think the world is moving from the VUCA world to Bani world. And I think the way the whole structure is happening, the trade wars and the shocks, the restrictions are there. How you take it this point?
So, two ways to look at it. A, from a transactional perspective, and that is, how do I live on my day-to-day basis? B, on the transformational perspective in terms of how do I position myself for the future? Now, typically what happens on the day-to-day working space is, and kudos to ma'am, she threw some wonderful insights. When we look at supply chain, we are always considered like a cost function. Hey, execute, this is what you are said to do. And that puts you in a serious spot of bother. Then you start looking at something that you can just do to maybe mitigate the problem for today and shove it a little ahead. Now try and understand the dynamics that's happening behind. You did touch base on the Russia-Ukraine bit. There's a rare earth mineral war going on. There's, don't quote me on the room, but Trump uncle waking up every day to his whims and fancies, implementing 25 plus 25. And then there's this entire phobia that builds around. Okay. And why I call this a phobia is because when you look at the US tariff impact, we all say, oh, we are hugely impacted. The reality is that close to 40% of Indian exports into US is still exempted when it comes to the teas and coffees and other products around. So the first thing that we need to do is get back into our room, do our maths and see, am I the most hit? Of course, if you are in the textile industry, you are hit. If not in that segment, you are not. That's one fundamental issue. The second way of looking at it is that what are my other opportunities, and that we will sort of speak in larger detail in some time. How am I being impacted? Now we also look at the rupee slide that's continually happening. Some may say it's good for an exporter. Trust me, in the long run it is not, because purchasing power parity of the rupee gets hit. Maybe as an importer we are benefiting. I would only like to sort of elaborate our contention. It's not only, when we look at supply chain, it is not only from the sourcing perspective, sir. It's also from the supply perspective. So as much as we are a importing country, we are also an exporting country. And I'm sure when we look at this house sitting over here, you will have divergent views. Now, when I now look at how are we trying to address it, first thing is we are trying to assess the situation. A, what is the magnitude of damage that we have been hit with? Or, like Samrat rightly said, in this topsy-turvy world, where am I heading for? First thing that we are doing is consolidation. I mean, as Adani, our businesses in terms of cements, in terms of the renewable energies, in terms of the Adani enterprise business, we are trying to assess the situation where we are and how does that opportunity sort of evolve for us. B, we are also trying to look in at, and that's a submission to the house also, we are also trying to look in at collective bargaining. Now, when I say collective bargaining, the mindset in India for the supply chain professionals, and I'm one amongst them, so do count me in, is that my rate should be the best. I should have the cheapest cost. I don't care what my competition does, so let me go and slide my competition in that. The moment you are looking at this bifurcated, individualistic approach, trust me, you are creating a pit for yourself. So there has to be larger forums wherein we actually get into combined negotiations. In United States, you have a shippers association. They determine the prices. The shipping line cannot midway go, or the airline, I mean both, they cannot midway go and jack up the prices. So the perspective, sir, has to be a bit more holistic. You need to look at your entire gamut of operations. You need to look at what is it that is bare essential to keep my plant and machinery running. And then how do I look at my growth strata hereafter? That's all for this round.
Good, thank you. Yeah, you want to add something?
Yeah, I just wanted to add one piece which I missed out earlier was, as a supplier, how we are reacting to the whole situation, right? So we are basically doing certain private brands. So for example, we supply to Walmart for their private brands, and some of the other retail chains in Europe as well as in US also. And the tariffs have started hitting us because in US, higher tariffs are getting implemented. So what we have actually done is, these companies typically would have our competition, right? There will be other manufacturers who will be willing to manufacture for them and, do their private labels. However, Dabur, because we have our own brands, so there is a certain amount of strength, right? We are a $1.4 billion company or $1.6 billion company. So what we have actually done is that we have started inviting these customers of ours to visit India, to visit our factories, to see our infrastructure which is there, because the infrastructure which we have for them may be only one unit, but for ourselves we have 13 other units also. So we have started using our strategic strength to basically demonstrate to them that they have a third-party manufacturer who is not having one single plant or very limited quality structure or very limited R&D structure. We have demonstrated our overall quality infrastructure, overall R&D infrastructure to influence them, and we have been able to retain certain customers even at a higher tariff. They are willing to take the higher landed cost from us just because they see us as a strategic partner for themselves. So that's something which we have done over the last 3 months and have been able to retain. There could have been a slide of almost 40% to our business, which was going to US. We have been able to maintain it just about 10-15% slide. So almost 25-30% slide was avoided because of this.
Good. Thank you, Samrat. Prashant, I'll come to you as you oversee the global operations. So when we talk about the global these trade realities, we talk about China plus strategy, right? And when we also talk about the global, how the global companies are really rebalancing their supply chain. Plus, to add another question to add, some part of it is that how the nearshoring, offshoring to that aspect, how it is going to work in this.
Sure. So, this is the life which I'm living day in and day out. Thanks for the question. This is a great question. I'll take a 30 minutes to introduce myself. I'm Prashant Patel, and during the lunchtime, somebody was asking that, hey, your surname being Patel, are you living here in Delhi? Delhi NCR? I said yes. So to introduce our beloved Prime Minister and me, we both born in Gujarat. Now we are living our life here in Delhi NCR. Of course, he lives in this. I vote in the same constituency from where he comes from. So that's how the life is. Okay, and then to introduce on the GE Vernova, and why I want to give this perspective is it is more relevant, because what I'm going to give an example of China plus strategy is more important. So GE Vernova is one of the youngest energy portfolio startup company. I would say startup because we are now no longer a part of bigger GE umbrella. We are 12 units of an energy segment. One more anecdote is like if you would have invested in 2024 to now, your share price would have been by 6.5 times. And if you put a phone to charge and if it takes 60 minutes, out of that 20 minutes comes from the machine which is manufactured by GE. So this is the scale at which we operate in the world. Our supply chain is most complex because we operate in 100 plus countries. We have millions of parts which is coming to our factories when we manufacture and assemble a gas turbine, a turbine which is used to produce 60 megawatt to 600 megawatt a machine. So it can help you to run the entire Delhi NCR, or it can also help as a fast power solution which would be available if you decide to put up a power another 6 months to 8 months down the line. So we operate in such a big scale and such a, like if you look at the horizon, it's like from a 6 month to 5 years. That's the scale at which we operate. I mean, I would not say China plus strategy, coming back to the question. Rather, we should be looking at, when I look at the global sourcing strategy, I would not say China plus. I would say I want to mitigate my supply chain risk from a sole country. If I am having a product which is only and only manufactured, not only in China, but on one of the country in the world, that's my risk. Why it is a risk? We have lived that life for last 5 years, and some of the panelists also talked in the morning that we have lived that life of unresilient, and now we have become so resilient that we want to make our life such and flexible that tomorrow there is a risk, we can switch over. We can turn off the switch, we can turn on the switch on the other side. So that's a risk mitigation which we always think, we always keep it in the mind, and that's how we define our strategy. There are still commodities where we as in India, not playing at a role. If I tell a very specific on the India growth story, we were like a $4 or $5 million spend in India for globe. Today we are $300 million plus. Yeah.
Good. Thank you, Prashant. I think now we'll switch over to the second part of it on the operational financial risk management. A little bit we'll touch base of that topic. I think I'll come back to Samrat, you on this based on the embedded scenario planning with the digital twins, right? How the cross-border risk are getting mitigated into this?
So I think, this digital twin technology is something which at least I have not used in real life, but we wish to basically experiment on it very, very aggressively. And, we are working with our IT partners so that we are able to, get this kind of technology created for ourselves. There are different nodes in supply chain for which a digital twin needs to be created. But while doing this, we actually studied some of the examples which our partners actually presented to us. So I can tell you there are different types of risks which are there. And whenever this cross-border uncertainty is there, these different types of risks, different case studies are there, different examples are there, how companies have actually used this technology to ensure that their supply chain remains, it doesn't break, it remains unbroken. So I think the biggest example which comes to my mind is basically a European EV supplier who was actually sourcing EVs from China, and they, rather than having a static plan, from a static plan, they moved to a dynamic plan where they actually, ahead of time, they identified that in case there is a disruption from China, because if Europe puts in, a 10% or 15% additional duty on China, how our sourcing is going to get impacted. The result was that ahead of time, at least 3 weeks ahead of, when actual duty was implemented, they were able to identify a supplier based out of Poland. The supplier had, a 15% additional cost. However, with the digital twin, they were able to identify that the lead time is going to drop because Poland is just next door. From China, it was taking more than 3 weeks to reach for the material to reach. From Poland, they were able to get it only in 1 week's time. So reduction of the lead time by almost 2 weeks. And 5% additional cost because Polish supplier was 15% costlier, but in case there was a 10% additional duty from China, then there was a 5% impact. But they were able to identify ahead of time, and the potential disruption was avoided because they worked with the Polish supplier and they actually created a supply framework with them where the supply started immediately when the duties were initiated onto China. The second example which comes to my mind is about financial disruption. So one Indian pharma company has used digital twin. So they were having an API supplier based out of China. So through digital twin, they evaluated what is going to be the impact in case my supply chain gets disrupted by a month. So they identified that the total amount of business which they were doing with the Chinese supplier was approximately 50 million. And a 1 month delay would have cost them almost a 10 million erosion in their bottom line. And they identified and they developed a source within India itself because they did the cost benefit analysis with the Chinese vendor and they identified that the total impact is going to be so much and we need to go for an alternate source. What also comes to my mind is that, these digital twins will be able to help organizations to stress test if there is multimodal shipment, right? If there is shipment, for example, there is a US retailer who was sourcing material from China into their west coast, and there was a disruption expected in the LA area, and they were able to identify with an increase of 2 weeks, they brought the material into the east coast, but the Chinese tariffs, they were, before the tariffs were implemented, they were able to actually get the shipment cleared and, move it inside. So all these things the companies have been doing over the last, maybe at least last 12 months, a lot of case studies are there which come into the media and we have been studying about them. Definitely this technology is very, very useful and there is way to go.
So if I'll just add into what Samrat is saying, that we also in our organization, because we deal with precious metal, we deal with the platinum group of metals, and we source the material from Russia, Australia, and South Africa. And the hedging is one of the important factor for us because when we see it, the metal, we don't know what the price of gold tomorrow and silver tomorrow. So how to hedge the material? So we do this scenario planning and we do digital twins planning on all across. And we are testing since last couple of almost 1.5 years the digital twins on the planning perspective on the pure metal. I think because it goes into billions of dollars of risk if we miss any opportunities. Just to add on the topic, Prashant, I'll come to you on this, that how the supply chain officers and the CFO aligning on this financials on the risk on this operational risk.
Yeah, very valid question. I mean, somebody has also touched base in the beginning that we are no longer a cost center, right? We are no longer the one who is writing a checks for the organization. We, as a supply chain professional, has got our chair into the boardroom. How do we? And if I talk about the GE Vernova, our CPO for the group has clear mandate and an actions coming from the board where we commit to the investors. We commit to the investor that how much cash we are going to generate. What is the profitability we are going to drive for an organization? All that comes from the people sitting here in the room, right? We as a supply chain professional, we are no longer just a procurement executives, but we are the board members who are leading the strategy. We are hitting directly onto the bottom line of a balance sheet. That's where we contribute, and that's what a global organization has recognized the value of it, and we would and we should continue to make that difference.
Thank you, Prashant. I think now we'll move into the third part of this discussion on the technology partnership and the policies. I think there is a very vital points to be covered in that. And Sumit, I'll come to you on this. When we talk about a lot of FTAs being signed by different governments, in India we have recently UK FTA being signed, and then before that we have a UAE, and we had old ages like IGSEPA and ASEANs are there, right? How this FTAs are really helping whole the supply chain domain itself we talk about, and what to look into in going ahead on the time.
Very, very appropriate, sir. Uh, Before we get on to the space of FTAs, again, we need to see how the dynamics are changing. Earlier, all of you, if you may consider, we were driven by organizations, by global organizations, World Trade Organization, and business would typically happen between these forums. You would be a supplier, sub-supplier, sourcer, sub-sourcer, depending on how your country and the cost parameters fix in. Fundamentally, what's happening in the global scenario today with the geopolitics turning around, and I'll not elaborate on that, it's known to all, is that all these agreements, sir, are becoming bilateral agreements. They are becoming bilateral between countries A, B, C, D, E, F. You named a few. Of course, the most watched around and my personal favorite happens to be the Indo-US trade deal, followed by the EU trade deal that we are talking. But and then we hear different facets that EU trade deal had some it had about 31 points, in which we've closed about 13, and then the others we are nudging ahead. With US, we've done 6 rounds of negotiation, and it's now only Modi and Trump waking up at a particular time and signing the deal, so on and so forth. But the reality is we do not know. We hope that this comes tomorrow, but we do not know where we stand today. I'll not get, and it's also because I'm also one of the service providers to the industry. And I'm also one of the largest importers and one of the largest exporters in the country. So we fortunately, we are able to have a broader view about both the dimensions. Today, the reality is that there are people, textile producers, solar panelists, etc., who are holding thousands and thousands of containers worth inventory all over, if at all scale is a measure over value. And they're just waiting when do they get the green signal. With the Europe trade deal also, what's going to happen is after we sign it, those 27 EU countries will have to ratify it, and then the opportunities will kick in. Now this is on the reality check where we stand. But what it means for us is if we go back 20, 25, 30 years back into our careers from where we started with, some basic school work will again have to start. You'll have to get out of your complacent suppliers and sources, the markets that you've been heavily dependent upon. It's good that we are diversifying. It's good that our deficit of trade has come down from 47 billion to 24 billion over the last 1 month, but nothing to take too much of an excessive pride in it. You never know when it swings back. What we have to do, and you rightly said, now since we continue to drive some of these boardroom discussions, Prashant, we'll have to tell our marketing folks, we'll have to tell our business owners that, guys, start looking for alternative markets. Look into these, visit those import promotion councils, try to see where lies an opportunity, because definitely there'll be much larger opportunities that will open up. Of course, it will not open to the scale and it'll not open to the scale of Target, IKEA, Tesco, Walmart like US, but maybe 5-6 countries put together, Australia, UAE, Oman. I think Modi, Prime Minister, is supposed to be in Oman today. Or yesterday, if I get the dates right. Okay. And of course, the Indo-Russia deal. mind you, India, China, we've been doing this flip flop with China. You know, at some time the entire sentiment is, oh, we don't buy Chinese crackers. But India, China, our exports to China over the last 1 month has gone up by 32%. The imports continue to remain where they are. So the long story short, the entire schematics of markets from where we source vis-a-vis where we supply, that you will have to go back to your drawing room and begin maybe from stage 1. The second part of it, and I'll just take a couple of minutes over here. Second part of it, linked with these policies, is also observe what is happening on the Indian infra space. And why I say the Indian infra space is because there are new infrastructural capabilities that are being added by the government. The NLP policy is catching up. The dedicated freight corridor is expanding, which will run the freight trains on a separate note altogether. More and more inland container depots are coming up. So do look at your supply chain from a different lens. Now one simple case study I'll tell. When I sort of stepped into the supply chain function, I was earlier from the ports and terminal side within the group. When I stepped into the supply chain function, I spoke to one of my SCM managers and he was very happy. Sir, we do an e-bidding, we invite 18 candidates and then we give L1, L2, L3. I said, and what if your L1 doesn't pick up? Then he says, sir, I give it to L4. Now these are some of the very cynical things that we've been doing in terms of being driven extremely only by one lens, and that's the cost lens. That'll not work. Sustainability, new markets, imbibing technology, looking at the larger schematics of infra play. Now I'm not gonna canvas or sell anything in terms of what we do, but these are some of the larger perspectives that the supply chain community so needs to be cognizant about and take it forward.
Thank you, Sumit. Quickly, Samrat, I'll come to you. Just quick answer on the again back to the technology part of it. We hear a lot about the AI, blockchains, and all the technological movement happening in the supply chain domain, right? With your experience, how you see that, whether it will be de-risk the supply chain whole function as it?
For sure, I think technology is one piece. AI and ML, as I see that, AI, ML, blockchain, I think 5 to 7 years down the line, it is going to be the kind of technology, as we consider Excel today, I think these technologies will be like that 7 years down the line. So people who will be able to use it will be the ones who will be able to survive otherwise. And there will be some technology, by the way, which will be on the horizon. Like today we are talking about AI and ML. 7 years down the line, there could be completely different quantum computing or some other technology which will be on the horizon and people will be vouching for it, whether how good it is going to be. And we see that there are, a lot of real life examples also of how AI and ML can help organizations. Today, AI and with help of machine learning, a lot of data which is available on the internet itself, the system, these machine language algorithms are able to read that information. We have an example of one of the chemical companies in Europe. It actually deployed AI and ML to read the data which was available on the internet. So it was able to read the data on how and on what issues their parliament was talking, on the issues of how their local population was reacting to the carbon footprint of the products which they are consuming. They were also looking at the import data itself into their country and a lot of other data which they were able to look at, and they were able to predict at least 6 months in advance that that particular country was about to come out with a carbon duty for imports from China. And they were able to predict it and they were able to import that material ahead of time to avoid some amount of disruption and the duty impact. So this is a real life example of a European chemical company which was able to basically overcome the issues which could have come to them. Apart from that, there are technologies like blockchain, for example. Now, how does US know how much oil India is importing from Russia. It is through blockchain that US is able to identify the source of the oil, which by the way, some of the oil is actually getting converted into petrol and diesel and is being exported back to those countries. So through blockchain, they are able to identify, and through blockchain, it is also possible for the companies to ensure and to prove to the buyer, the adherence to the FTA. Right. So for example, if they do not want any oil to be imported into India from Russia, so through blockchain technology, we'll be able to prove the origin of the oil. And if there is anything which in between has got mixed with it, that also through blockchain, it will be possible to know. I was talking to a supply chain head of one of the pharma companies who happened to be my boss in my previous organization. So he told me about blockchain, how it is being used in pharma. So they were actually studying the data of temperature logs which are maintained, because in pharma it is very important to maintain temperature during the transit of the goods. So the log was studied, and the data which was there available with them was actually exceptionally close to the norm. So they analyzed the data and they found out it is not possible to have such accurate data. And then they found out that probably some of the temperature logs were not working properly. And they were able to identify and check it, and they were able to then avoid certain quality disruptions which could have come to them. So I think in various ways, AI and ML today is available and it can be used by companies, and there are use cases which are available.
Thank you, Samrat. I think our discussion will not end if we'll not talk about the ecosystem. I think quickly, Prashant, I'll come to you. How the whole ecosystem, whether it is a 3PLs we're talking about, federal system or suppliers, sub-suppliers, how this will be aligned in this whole tariff war situations?
Yeah. So when we look at the ecosystem, right? Maybe 10 years back, nobody was talking about ecosystem at all. Nobody was talking about supplier partnership. Today, the whole narrative is changed. We are not in the world where we are just looking at the vendor or a supplier who just give us a part component as per our technical or quality requirement or as per the spec or whatever we want, right? Now we are talking of a partnership. That's the whole narrative which has changed. Now, what is a true partnership? Partnership is not just placing an order and getting the material delivered as per your requirement, meeting your quality, delivery, or lead time. It's going hand in hand with the supplier, looking at their operation, helping them to improve their efficiency, their productivity, and ensuring building up their capacity to meet your own capacity demand. And I think somebody shared that how the customer or the end product user is sharing the information to the tier 1 or tier 2 supplier or a manufacturer. That's when you build that entire ecosystem, that's the true partnership which comes. You put on that, and that's what we are living in the world today at GE Vernova, where we are helping the supplier to debottlenecking the waste from their own system. We are helping them to bring up to an operation excellence what we look at it. As an GE, as a global organization, we put our own lean resources to help them out to solve their issues and their challenges. So it's a true partnership. If somebody has gotten any issue in starting from the raw material to shipping the part or a component to our warehouse, it's our problem, and that's where the partnership has been changed now.
Thank you, Prashant, and thank you, panelists. I think we had a good discussion on this when we are talking about the navigating the risk associated with the whole scenarios. When talking about how we can realign the whole geopolitical situation, how the strategic autonomy has to be there, and then the focus on the sustainability. I think one of the topic we have not covered, but I think it will be covered in other discussion. I think with that, I think to summarize this fruitful discussion we had, if you have any time for question, otherwise we'll close it. You can take one if you want. If anyone has any questions, one question, we can take it up.
Can you have a mic for him, please? I'll give you this. I'll give this one.
Hi. We are supply chain management consultants. So I think we spoke a lot about China plus one policy, and you rightly said that it should actually be not China. It is not about China. It is that we should not be having one supplier. But still, China names does appear whenever we talk about the supply chain or any procurement or any sort of products. So what would you like to just reflect upon what China is doing different, which maybe a country like us would like to copy, would like to copy with pride? I mean, anything you'd like to share?
Sure. So when you look at what is the edge China has got, and what is the edge other country or rest of the best cost country has got, right? Particularly India, if we are talking, because we are all Indian sitting here. China has got material productivity. The cost of material which is being made available is that cheap than what you get it here in India. There are number of reasons. I'm not going to talk on that. What we as an India has got an advantage is a labor productivity. Labor arbitrage is something which we have an edge. Say-do ratio we have. The language barrier which China has got, we don't have. There are some pluses, there are some minuses, right? And I think government is also helping in improving our logistic cost. Like somebody talked about 13%, 14% to 6 to 7%. That's also going to help us. Labor productivity continue to be more and more better. Debottlenecking the waste into the system at a manufacturer's location is going to drive the labor productivity further better. Because material, it's some Raj is being controlling that entire cost of the raw material available in India today. Can you control? No. So what is controllable? Let's focus and control that.
Sir, and just to add on to Prashantji, there are two other driving factors. A, China went ahead and mobilized their infrastructure much ahead of India. Now we are thinking about the Vadvans and the new age ports and the airports. That's one. The second thing is that when you look at the entire Chinese DNA, it's very confidential and still landlocked. And that is where, I mean, being an Indian, I believe China will continue to have an edge, because as we move towards globalization, we will open more technology, will make it more permeable. I mean, in the trade deal, of course, a lot of discussion is hovering around the digitization and the digital space. We will not touch it over here. But that'll become more porous for us. So it may become an advantageous situation, it may not. But China, yes, they'll continue to have their USPs. Their ports, infrastructure, labor, Prashantji rightly said. But let's watch on the game. I mean, we are very much there. So we are definitely a lot better than where we were 10 years back.
Thank you. Thank you.
Thank you. Thank you so much. Thank you, gentlemen. Thank you.